Global markets digest Fed's hawkish message. Wall Street stocks edged lower on Tuesday as the Federal Reserve began a two-day meeting, making investors cautious. Also, the data showed that U.S. producer prices were 6.6% higher in May than a year earlier, the highest since 2010, adding to signs that inflation is running higher in the country. As such, the S&P 500 dipped 0.2%, the Dow Jones Industrial Average lost 0.27%, and the Nasdaq Composite fell 0.71%. Asian equities were mixed to lower in quiet trading on Wednesday. On the data front, Japan's trade surplus jumped 49.6% in May, pointing to a slow recovery in exports. In China, retail sales rose 12.4% in May, missing expectations once again. Industrial production rose 8.8% from a year ago, less than the 9% growth forecast. As such, China's Shanghai Composite shed over 1%, Japan's Nikkei 225 lost 0.51%, Hang Seng in Hong Kong gave up 0.70%, while Australia's S&P ASX 200 finished just marginally higher. European stocks finished marginally higher on Wednesday, with the main equity index holding off record highs amid a cautious tone among investors. The Stoxx Europe 600 index rose 0.2%, the German DAX was flat, the French CAC 40 was up 0.2%, and the FTSE 100 index was up 0.2% as well. On the data front, UK consumer prices rose 2.1% on the year in May, the fastest pace of growth since July 2019. The rise exceeded the Bank of England's target for the first time in almost 2 years. Meanwhile, in its latest forecast for the German economy, the IFO cut German growth forecast this year from 3.7% to 3.3%, citing supply bottlenecks, which in turn is also manifesting in higher price pressures. Elsewhere, the EU lifted travel restrictions for US residents today, adding to signs that the summer reopening for Europe is starting to progress in earnest. Meanwhile, ECB Vice President Luis de Guindos said that central bank policy should normalize gradually with prudence. U.S. stocks dropped overnight after the Federal Reserve raised its inflation expectations and moved up the time frame on which it will next hike interest rates. The S&P 500 fell 0.54%, the Dow Jones Industrial Average lost 0.77%, and the Nasdaq Composite shed 0.24%. In the bond market, the yield on the 10-year Treasury climbed to 1.55% from 1.50% late Tuesday. Asian stock markets followed Wall Street lower on Thursday after the Federal Reserve indicated it might ease off economic stimulus earlier than previously thought. The U.S. monetary policymakers, who previously forecast no interest rate hikes before 2024, estimated that the benchmark rate would be raised twice by late 2023. The Fed also indicated that it sees the U.S. economy improving faster than expected. The Nikkei 225 in Tokyo lost 0.93%, Hong Kong's Hang Seng was off less than 0.1%, the Shanghai Composite Index was up 0.08%, the Kospi in Seoul sank 0.36%, and Australia's S&P ASX 200 gained 1.4%. In currencies, the dollar advanced across the market due to a hawkish message from the Federal Reserve. The Euro-USD plunged below the 1.2 thousand figure, extending losses into two-month lows around 1.9070 early on Thursday as traders continued to digest the outcome of the FOMC meeting. Meanwhile, oil prices extended the rally to $75 area earlier in the day before retreating to under $54 as risk sentiment deteriorated following the Fed's meeting while the dollar rallied across the board. Earlier, the API report showed that U.S. oil inventories dropped by 8.5 million barrels in the week ending June 11th, after dropping by over 2 million barrels during the previous week. The EIA said on Wednesday that crude oil inventories fell 7.355 million barrels last week, compared with analysts' expectations for a draw of 3.29 million barrels. Distillate stockpiles fell 1.023 million barrels in the week against expectations of a build of 186,000 barrels. That is all for today. Thank you for watching. Please click subscribe to always be in touch with the latest market news.